Good morning. What's up, everyone? Hope you guys are doing well. Today is March the 10th. Overall markets end up rebounding nicely yesterday. Of course, we had some news as well coming into close with potentially Trump saying the war is coming to an end very soon. We are actually right back inside of the range, which we'll talk about here. Spying cues, specifically Q's right back inside of the range here. SPY kind of broke underneath its range. SPY is actually a little bit more weak compared to the NASDAQ. We'll take a look at that here in a second. What's up, everyone? Good morning. Hope you guys are doing well. Good morning, Marcus, Martin, KO, Victor, TW, P1, Cosmic, Lamit, Stock, I am, B Roots. Good morning, 50. Good morning, Deuce, Robert, Martin, Cinna, Gerald, Deuce, Swan, Maria, Stefan. Yeah, what's up, everyone? Good morning. Hope you guys are doing well. Let's pull up the economic calendar. There's not too many red folder news events. The main thing, of course, is the ongoing news events that we have with the war. But we'll see if that potentially changes here moving forward. Of course, Trump did say yesterday that it will, or he said it could come to an end very soon. But as I mentioned, we're kind of right back inside the middle of the range. So first things first, coming into tomorrow, we do have core CPI, which is going to be fairly important. So that's going to be the major next red folder news events. That is going to be CPI at 8:30 a.m. Eastern Standard Time. Thursday, we do have unemployment, and then of course Friday, core PCE. We have prelim GDP, and then we have the JOLTS opening at 10 a.m. So as you can see right here, the main thing is of course going to be that core PCE at 8:30 a.m. Eastern Standard Time. If you scroll up, the major news event yesterday was Trump saying the signal possible to end war, and then of course with the oil sanctions as well. So that's the reason why we ended up pushing back towards the upside, but we're technically right back in towards key levels. So if we look at the SPY and the Qs, let's give kind of an overlook of what we're looking for here on the hourly time frame. As you can see, number one, the Qs are actually right back in towards key levels. And this is essentially the area that we dropped from, which was the original war news towards the downside. So let's actually go into the daily chart real quick. Number one, as you can see, we're actually still stuck inside of this range. So if we were to draw this out, I'd say the past month, right, 3 to 4 weeks here in the overall markets. If you're looking at this on the daily chart, look at this consolidation that we've had specifically for the QQQ, right, in a very tight range, right, really between our 590 along with our 620, going from range low to range high, back down to range low, back up and towards our range high. You can see we've really just been stuck inside of this consolidation, and that's primarily the reason why we've had a lot of consolidation, specifically a lot more mean reversions, a lot more reversals on the tech side, just because the Qs has been inside of this range. If you look at the SPY chart here, this one recently broke outside of the range, but really just bought right back up. And now we're right back in towards key levels, which will be our 680. So with the Qs in a very tight range, you can see yesterday instantly got bought up, right? Buyers stepped in off the lows and pushed us right back up and towards essentially now the middle of the range, which is our 606. So coming into market open, let's go on to the hourly time frame. So we know that the daily chart isn't as clear because we're stuck inside this range within the past 3 to 4 weeks. If we go into the daily time frame now, if we're looking at the original war news, so we're really just focusing on our last week's price action. This is when we originally dropped towards the downside, and then we had some more escalations, of course, but instantly bought up, and then of course another gap down in towards key levels, and then yesterday, right, really buyers stepped in, offer key level of support, and reversed back towards upside, filled a couple of gaps that we had marked out. And of course, we had some news yesterday, popped this up in towards key levels, which just happened to be our higher time frame key level of support. sorry, key level of resistance, which happened to be our 612, and now we're just going to come right back towards the downside. So as you can see here, we're actually very neutral here in the markets. I am leaning, of course, a little bit more bullish just because, right, buyers stepped in nicely yesterday. Right now, based off the daily chart, the VIX is dropping here as well. I would like to see a push back towards the upside moving forward, but key levels is going to be this 604 moving forward. So let's go back onto lower time frames. Number one, we do have to keep in mind that we are still technically inside of this range. So the key levels coming to today that I do have for the SPY and ES, what I'm going to have marked out here is going to be our 603, which happened to be a key level that we have marked out, along with our 612. And then we can also mark out our previous day highs, 609. Let's go back on to let's actually draw out these key levels, which is going to be that previous day highs. Then we can actually remove a few levels here as well, since these aren't relevant. Actually, we'll keep this 599 here. But coming into market open for the Qs, similar thing. It's always just going to be the reaction that we have off our key levels. What we're going to keep an eye out for is going to be that 609 along with our 603. If we do want to see any sort of upside here in the markets, really above our previous day highs, we can see a potential push up and towards this 612. Another possible scenario here is going to be that bounce off our 603 for that continued pushback towards the upside, or of course, now we'd be looking for longs above our pre-market highs for continuation. Of course, there's been a lot more mean reversion, so you'd really look for longs for a potential reversal here off your 603. So that's what we have for the Qs coming into market open here today. If we do want to see some downside in the overall markets, right, pop and fade here off our 609 previous day highs is in play for a potential pushback towards the downside. Another possible scenario here is if we break underneath that 603, we can see a push down in towards really the area that we broke out from, which happens to be our 599. So for the Qs coming to market open here, really same thing as yesterday. We're just going to keep an eye out on our previous day highs along with their previous day lows. One thing we do have to keep in mind, as I mentioned, is we are still stuck inside of this range. If you just zoom out here, even on the hourly chart, you can clearly see that, right, we've been in a range for a while. So until we can really break above key levels, 618, we do want to be a little bit more cautious and look for potential even more mean reversions in the overall market, just because the QQQ is ranging in between these key levels. As for the NQ, basically the exact same thing. The key levels that I have marked out on the NQ coming into today is, of course, our last week's highs. You can see price ended up pushing up nicely in towards our key levels here in the overnight session. Now we're having a little bit of a pullback. Key levels that we're going to have marked out today is going to be our previous day highs, 25,040. If we do want to see any sort of push towards the upside, above our previous day highs for continuation towards the upside. Another possible scenario here is going to be that bounce play off our 24,800 for that continued push higher here as well. If you do want to see some downside, it's going to be that previous day high rejection, or of course now you're going to be looking for shorts underneath our 24,800 for that push down in towards that 24,640 here on the higher time frames. So this is what we have for the NQ coming to market open. Now let's go on to the ES, which is actually lagging behind just a little bit. So we'll take a look at this. What's up, everyone? Good morning. Hope you guys are doing well. Early today, no. Basically, we did have daylight savings over the weekend. So if you are anywhere in the world, we basically moved the clock 1 hour forward. So now it's going to be 1 hour in advance, if I'm not mistaken. Yeah, what's up, everyone? Good morning. Hope you guys are doing well. Let's go on to the ES. So as you can see here for the ES on the higher time frames, the key levels that we're going to have marked out, as you can see, let's go back onto the daily chart. As you can see, yesterday, we actually came all the way back down in towards key levels here, which happens to be our 6600. So this was our higher time frame key level of support. So as you can see, price ended up pushing up nicely, right? Buyer stepped in, and now we end up actually having a pretty strong candle close. So you can see price basically opened, had a big push towards the downside, ended up buyers stepping in, and then we end up closing fairly bullish here on that daily chart. So as you can see, right back in towards the area that we broke down from here. Now what we like to see for the ES moving forward is really the reaction that we have. Number one, I have actually two key levels. We have our 6, 7, 20 along with our 60, essentially our 6,800 here. So for the ES coming into today, what we're going to keep an eye out on is going to be this basically this 6,780 here. If we do want to see some upside in the overall markets, reclaim back above is needed for any sort of continued pushback towards the upside. Another possible scenario, of course, is going to be above our pre-market highs, which I'm not as a fan of, but you can kind of mark out this previous day highs pre-market high level. But key level for me is going to be the 6,780 if we do want to see any sort of reclaim. If we do want to see a little bit of weaker price action here, key level that we have is still going to be that 6,780. Shorts are in play, previous day high potential rejection for this pushback towards the downside, or of course now underneath our 6,780 for this continued pushback down in towards that 6,720 here on the higher time frame. So this is when we had news yesterday. So we end up having this big pop in the markets. If we do want to look for a potential reversal, right, potential rejection here off that 6,780, we can see a push down in towards that 6,720. So this is what we have for the ES coming into market open here. If we go on to the SPY, fairly similar thesis here. The key levels that we have coming into today is going to be that 676. And then we could also now mark out that previous day highs here as well. So coming into the SPY, key levels today is just going to be our previous day highs along with our 676. If we do want to see some upside, needs to maintain above that 676 for that push towards the highs. Another possible scenario here is above our 681. We can see a push back up and towards our 688. So these are the scenarios that we have for the SPY. If we do want to see potential downside, pop and fade off our 680 is in play, or of course, underneath our 676, we can see a push down in towards that 670, of course, which, as I mentioned, is the area that we ended up pushing up nicely from yesterday, right? This is the news that we had yesterday. So if we break back underneath, we can see a mean reversion back towards the downside. Okay, I am going to go on to the SMH here, since this one, right, actually ended up having a nice rebound yesterday with the major indices. Then we'll head on to some of the tech names that we do have here now as well. So if you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below as well. Yeah, we also actually just had a news event, so that's why we're having a little bit of weakness here in the pre-market. I think someone mentioned earlier as well, but we had some news. It says Tuesday will be our most intense day of strike. So we'll see what happens. It's ongoing, so that's something to keep in mind, right? A lot of times when Trump does say something, it's very important for the overall markets because there's going to be a big reaction. But normally speaking, right, if there's always going to be more information that develops. So as time goes on, as longer it takes, honestly, the worse. But we're gonna have more information. It's gonna come out. It can come out at any time, so that's why we always mention, right? Make sure to have, right, either Twitter or something pulled up where you have some notifications. Where just to keep in mind, if you have any positions open, that's something to be cautious. All right, let's go on to SMH here. Good morning. Yeah, we'll go over opportunity. Yes, appreciate that. I'll definitely check that out here in a second. Let's go on to the SMH first. So as you can see here on the daily chart, key levels that we have marked out is just previous level of resistance, turning into support nicely, which is that 375. So you can see buyers stepped in, really solid bullish candle here on the SMH. Higher time frame, if you look at the weekly chart so far, trying to put in a big bullish candle. Same thing here on the daily time frame as well. So for the SMH, the key levels that we're going to have marked out coming into today is going to be our 376. Other levels that we could have marked out now as well is going to be that previous day highs, and we can drag this down here as well, which is going to be that 394. So coming into market open here, the key levels that we're going to have marked out 394 if we do want to see some upside above our previous day highs for a continuation. Another possible scenario now is going to be a pullback long off our 386. Shorts are in play, as I mentioned, rejection here off our previous day highs, or now if price had a big push towards the downside, you could be looking for shorts underneath that 386 down in towards that 380. If we look at the IWM, another one which broke outside of the range, this one's actually retesting the area that we broke out from. So as you can see here, it came back down into key levels of support. Now it's just coming back to retest essentially the area that we broke down from here, which is at 256. If we can reject here off that 256, we could be looking for the trade down in towards that 250 here and below. If you go back onto IWM, the key levels that we're going to have marked out, of course, is going to be that 254. As long as you maintain underneath that 254, you're going to maintain a bearish stance here on the IWM. Shorts are also in play here underneath that 250. If you do want to see some upside, bounce play here off that 250, or of course, now above our previous day highs for any sort of continuation towards the upside. So this is what we have for the overall indices coming into market open. And I'm going to go on to some tech names here now. So if you guys do have any tech names, you guys can drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below as well. Okay, let's first go on to Tesla. So Tesla, this one on the higher time frames, we'll kind of take a look at TSLA here in a second as well. But basically Tesla is in a very key point of interest, which happens to be our 380. So yesterday we kind of talked about this level being super key. Shorts are in play underneath our 380 or trade down in towards our 380. Now you can see buyers are actually stepping in off this higher time frame level of support. We also do have this downtrend forming here as well. So if the markets do want to bounce, Tesla's going to be one of my main watches for a potential kind of mean reversion back towards the upside. So as you can see right here, based off the daily chart, nice buyers stepping in off our 380 as I mentioned, lower wick, and we ended up having a strong daily candle close. So this is basically how this daily candle formed. Price opened here, pushed lower, buyers stepped in, and then we basically closed at the highs. So as you can see right here, let me kind of just zoom in if you guys can't really see it, but key level here is that 385, which as you can see, some buyers stepped in. Now let's go on to the lower time frames here on Tesla. Still, we're going to be open and playing both sides here, but the key levels that we're going to have coming into today and moving forward is going to be that previous day highs. So let's mark this out. Let's go into the 1 hour time frame here as well. As you can see, what we have forming so far is a downtrend. So if we were to just draw out this key level support, we can draw out this downtrend forming here as well. Multiple touches on Tesla, rejected last week, ended up pushing down into a key level support. Now testing this downtrend once again. So for Tesla, we've had 3 touches of this downtrend break. Now what I like to see is really above our previous day highs, potential continuation, break of this trend line break here as well, potential move back towards the upside. So the key levels that we have coming into today is going to be our previous day highs 401. We also have our previous day close here as well, which price is basically gravitating towards. So key level previous day highs 401 for continuation. If we do want to see some upside today above our 401, continuation towards the highs, another possible scenario above our pre-market highs for continuation here as well. So for Tesla, this is going to be one of my main watches, especially if the market does want to bounce, if this does want to show strength with the overall markets, or if it does want to break above that downtrend break, we can be looking for continuation towards the highs. So this is what we have for Tesla. Let's keep an eye out on our Tesla. So our Tesla above 401. Only way I'm interested in downside here is if we end up having a sharp rejection. You could be looking for kind of a mean reversion trade back down in towards your 395. So this is still in play here as well. So we're not going to try and anticipate this downtrend break, but with Tesla and with the market being a good spot, if we can show any buyers above our previous day highs, of course on the day, sorry, of course if you look at this on the hourly time frame, right, the best longs would really be above our 407. That would really show that buyers are stepping in, right? Big break of this downtrend break. If we go look for longs above our previous day highs, that's still in play here as well. But 407, of course, is that key level support here. Sorry, key level of resistance on that higher time frames. Let's go on to NVIDIA. A lot of these names, as I mentioned, are just coming right back down into key levels of support. Still kind of ranging here, so there's really not too much to talk about for NVIDIA. Very tight range the past week, as you can see, just kind of ranging in between our 175 along with this 182. So for NVIDIA, the key levels that we're going to have marked out here is just our range high along with our range low. These are the levels that we have marked out. Yesterday went from our range low back up in towards our range high. Now you can see a little bit of rejection here in the overnight session. So coming into today here for NVIDIA, key levels that I'm going to have marked out. I'm going to mark out our previous day highs, drag this down, and I'm also going to have our 180.50 here as well. So as you can see, these are the key levels that I have for NVIDIA. If we do want to see some upside, right, break above our previous day highs for continuation, but we do have to keep in mind we're coming into a key level of resistance here on the higher time frames. Another possible long scenario is just going to now be above our 180.50 for a mean reversion. So these are the two long scenarios that we have played out for the markets today. Another possible scenario, pop and fade here off our 183, which just happens to be our previous day highs, are now underneath our 180.50. Push back towards the downside here is in play. So these are the scenarios that I have for NVIDIA. The reason why I'm marking out really a lot of scenarios on most major names is because we've been stuck inside of this range, right? Q's right back inside the range. So the same game plan really still applies moving forward. So until we can break outside this range, we're expecting more kind of mean reversions in the overall markets, more reversals. Continuation has been fairly tricky just because, right, the Qs has been stuck inside of the range. Let's go into AMD here. AMD on the higher time frames, nice bounce off our key level support here as well. Nice kind of daily candle right off our key level support, right back inside the middle of the range here as well. So the range that we have on AMD is in between our 220 along with our 192. Let's go back onto the lower time frames here. So if you look at this on the hourly chart, you can see we're just kind of consolidating in between this 190 along with this 220. Now we're right back inside the middle of the range, and you can see a little bit of reaction here off equilibrium. So as you can see for AMD, fairly neutral coming into market open. The key levels I am going to have marked out is going to be that last week's highs, which we can have marked out, which happens to be our 203. So key level here on AMD coming into market open. If we do want to see some upside coming into today above our 203 for continuation towards upside, or now it's going to be the bounce play for 198. This is essentially the area that we broke out from for continuation higher. If we're looking for downside, potential pop and fade here, 203 rejection, that can be in play for a push down in towards that 198. Really, this is the only short scenario that I do see here on AMD will be that previous day high rejection. Let's go into Apple here. This is the one that is still showing a little bit more weakness compared to the overall markets. Yesterday, we ended up having a nice bounce off our key level support, and now you can see right back in towards key levels, which happens to be our 261. So if you go back onto the 15-minute time frame here now, key levels coming into today here for Apple is going to be that previous day highs. If you do want to see some longs, now we need it above our previous day highs for continuation towards the upside. Another possible scenario, longs right off the bat, but both of this is going to occur above that previous day highs, 261. If Apple rejects off our previous day highs, then we're just going to come right back towards the downside, pre-market lows, and basically equilibrium of yesterday 258. If you look at this on the higher time frames, as you can see yesterday, nice kind of bounce at key levels of support, right? Technically, it's still building these lower highs. So until we can really now break back above our 260, right? This very much well could reject here and continue right back down in towards that 255. So it'd have to break above our 260 at a minimum and potentially form, right, this kind of inverse head and shoulders here on the higher time frames. So key level, mark out that previous day highs on Apple. As for Google, if we look at this here on the daily chart, Google's in a very good spot here as well. Key level that we have marked out, 296, multiple touches here on Google. Now you like to see, right, potential kind of reversal here based off this daily candle for a pushback towards the highs. If you go back onto the lower time frames here now as well, key levels that we're going to have marked out, you can kind of just mark out that previous day highs along with our last week's highs. But basically what we have here is going to be that 305 along with our 308. If you do want to see any sort of upside here on Google, we need to see longs above our 305 for any sort of continuation, or of course above that 308 here on the higher time frames. If we go into a few other tickers here, Microsoft, I do like Microsoft, kind of basing nicely here. This is one of my favorite names, hit the 200 weekly SMA here as well. Right now, we're trying to form kind of this mini inverse head and shoulders here on the higher time frames. If you look at this on the lower time frames, now what we like to see for Microsoft is really the break of this mini range that we do have. So longs are in play above our 412. Of course, you can see buyers stepping in here off that 402 as well for this potential mean reversion back towards the upside. So we like to see it above that 412. If we reject, we can see a push right back down in towards that 402. Or of course, now if we break underneath key levels, right, we can see a push down in towards that 398. If we go on to a few other tickers here, let's go on to Meta. A lot of these ones, as you can see, are just stuck inside the range. So just want to be more cautious. During these times, it's best to play select few tech names. And you can really play the major indices if you like, just because that's the one that's really moving the market. Meta in a lot of consolidation here between our 630 along with that 660. In between here, you just want to be more cautious. Current rejection here off that 660 here in that pre-market. And now we're just basically gravitating right back down in towards our previous day highs. So the key levels that we can have marked out for Meta is going to be that previous day highs. Really now it's going to be that 647. If you do want to see upside, maintain above that previous day highs for continuation for potential move back up in towards 650 along with our pre-market highs. If we want to see some downside here, of course, now it's going to be underneath that previous day high rejection. We can see that push back towards the downside. All right, let's go over a couple more tickers here. Amazon, nice kind of rejection here off our 220. Yesterday, the key levels that we have marked out was at 212. So that was the key level that we have to reclaim if you do want to see any sort of upside. Ended up rejecting off this level right off the bat, reclaiming it later into the session. So for Amazon, key level, let's just mark out that 212.50 coming into market open. Now we could be looking for longs above our 212.50 for continuation higher, or now we're going to be looking for longs above our previous day highs, 212.50 for continuation higher here as well. Shorts are in play underneath 212 for a push down in towards that 211. And then for Netflix, not really too much to talk about on this one. Consolidation really holding up compared to the overall market. But as you can see here for Netflix, if you're just looking at this on the higher time frames, nice pop. Now we're just consolidating here. We would like to see now the break above. It's going to be our 99 plus our 100 key psych level. So for Netflix moving forward, key levels that we can have marked out, 97.50 along with our 100 key psych. Let me just kind of refine this. Key levels that we have marked out is going to be our 100 key psych level and our 98. So if you do want to see some upside here, maintain above 98 for continuation. Another possible scenario is going to be now above 99 for a push up and towards our 100 key psych. Shorts right underneath 98, you can see potentially now previous day lows 96.50. So this is what we have for the tech names coming into market open here today. We'll go over kind of the game plan of my top watches coming to market open here. If you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below as well. Okay. Yeah, what's up, everyone? Good morning. Let's go over a few tickers here now. Starting off with HIMS. So HIMS, as you can see here on the daily chart, recently had some news. So we recently had some news, which is the reason why we end up having a gap up. Key levels that we have for HIMS is essentially the area that we dropped from. So based off this chart, of course, right, some of the key levels that I have for HIMS is right this original pop that we had, which got faded towards the downside, and of course we broke underneath key levels, pushed towards the downside here as well. So my key level of resistance is the exact same as yesterday, 24 key psych level here on the higher time frames. What I personally like to see is the break above. Now it's going to be that previous day highs. You can see multiple touches in the pre-market here as well. What I like to see is now the break above our previous day highs, hold above our previous day highs for this continued push towards the upside. If it rejects off this level, I'm still interested just based off the higher time frames, would be the reclaim later into the session here as well. So you can be cautious of this potential kind of fake out right off the bat. But regardless, both the trades are going to be long positions above our previous day highs for continuation, for push up and towards our pre-market highs. And then really the next levels that I do have here on the higher time frames is going to be our 30 key psych level here on the higher time frame chart. Something that you have to keep in mind. Right now we have kind of technicals lining up along with fundamentals. So we'll see if any sort of momentum can kick in on this ticker. Of course, right above our previous day highs is going to be key. It's more of a retail heavy name as well. So there's a lot of kind of retail backing it. So if we can get above previous day highs, we can see a nice kind of push towards the upside. So keep this in mind coming into market open here today. As for a few other tickers, Oracle, we do have earnings tonight. So as you can see, another one that's been quite beaten down to start off this year. Another kind of continued push towards the downside. Key levels that we have for Oracle is really the area that we broke down from. So I personally like to see nice kind of pop here, potential mean reversion. We do have this gap that we created. This was from last earnings, sorry. If we can get a nice kind of maybe earnings pop, we can see a potential mean reversion back towards the upside. But we'll see how this forms here. Key levels that we have marked out coming into today, really the levels don't matter just because we do have earnings in the after hours. But we can keep an eye out on our 160 along with our 152. If we do want to see some upside above our 152 or now, of course, above that higher time frame key level 160, we'll touch up on this a little bit more tomorrow here on Oracle. As for Palantir, this is the one that's still holding up here on the higher time frames. Key levels that I have marked out is our 154. As you can see, buyers stepping in nicely. Overall market bouncing. Palantir just kind of holding above our 154. What I would like to see now is maintain above our 154, continue push towards the upside. Another possible scenario, of course, is going to be above our previous day highs for that continuation towards the highs here as well, 161. So this is what we have for Palantir. Shorts are only in play underneath that 154, and we can see a push back down in towards that 150. As for some other tickers here, let's go on to MU and SNDK. We actually ended up bouncing off key levels of support yesterday, which happens to be our higher time frame, right? Key point of interest, 360 here on MU, exactly where buyers were supposed to step in. You can see this daily candle, lower wick, strong daily candle close. Let's see if we can get this kind of push back towards the upside here on MU. Key levels now is going to be our previous day highs. So we like to see longs above our previous day highs, which happens to be our 392. So let's just kind of refine this level, previous day highs up and towards our high that we created here on Friday. So now we'd like to see buyers step in. bounce off this key level, push back towards the upside, right? Above our pre-market highs, we can see this push back up and towards our 408 here as well. As for SNDK, another one above our previous day highs. Let's keep an eye on this one here based off the daily chart. Another one right off our key level of support, which just happens to be our 540, opened up underneath, immediate buyers stepping in. Let's see if we can have some sort of mean reversion back towards the upside. Key levels that we have marked out, previous day highs coming into today. So let's keep an eye on SNDK. Nice buyers stepped in. Nice kind of hold above our previous day highs so far. Maintain above our previous day highs. We can see that continue push up and towards our pre-market highs and above, which will be our 612. Okay, as for a few other tickers here, so SNDK MU above our previous day highs, a couple of the semis shaping up nicely here as well. So we'll keep an eye on these tickers coming into market open. As for a few other tickers, see some of you guys mentioning Circle, another nice move towards the upside, nice higher time frame move here as well. Key levels that we're going to have marked out is just going to be that previous day high. So as you can see, every dip so far just being bought up, nice reclaim yesterday. Key levels that we can have marked out just are 110 for continuation towards the upside here as well. Intel, another one that I do like here, right off our key level of support. Keep an eye out on Intel, super solid downtrend break forming here as well. Nice kind of buyer stepping in right off our key level support. Let's see if we can get this downtrend break here on Intel. More of a swing position based off the higher time frame here. But we can now keep an eye out on our previous day highs, which will be our 46. All right, so that's going to be the key level that we have marked out. Right, 46 essentially our 45.60 above our previous day highs. We can see continuation up and towards 47 and above. So with that being said, let's kind of go over my game plan coming to market open here. For the spine cues, as I mentioned, right, key levels that we have marked out, previous day highs along with our 676. So let's keep an eye out on the reaction that we have off that key level. As for the cues, let's keep an eye out on the reaction that we have off 609. That's going to be key coming to market open. As for my main watch, it's going to be the Tesla above our previous day highs just based off the higher time frames. So we're going to keep an eye out on Tesla once again. As I mentioned, higher time frame downtrend kind of forming right into a key level support. I would like to see the break above our previous day highs for this potential pushback towards the upside. Nvidia inside of a range here as well. So until we can break the range, going to be a little bit more cautious. AMD, similar thing, right in between the middle of the range. So my main focus is going to be on Tesla today above our previous day highs. That's going to be key for me. And then of course, we'll keep an eye out on the major indices. One thing to keep in mind, we are inside of the range still. So we just want to be a lot more cautious. There are a lot more mean reversions that have been happening in reversals. So we're just going to be a little bit more patient, wait on the higher time frames. And yeah, that is going to be it for me today. I'm going to get ready for market open here now. Yeah, that's it. So I'm going to call it a day. Hopefully you guys did enjoy that. If you did, appreciate if you guys drop a like and sub. If you guys haven't joined the free daily watch list, that of course is in the description below. And I will see you guys all tomorrow. All right, take care everyone. Peace.